Namaskar friends, myself Deepak Kumar Rath. I welcome you to the digital media of Uday India. And today in India Things, I want to tell you that the International Monetary Fund IMF recently revised its GDP growth forecast for India for fiscal year 2025 and raising it to an impressive 7%. And this upward revision comes as a testament to India's robust economic policies, strategic reforms, and resilience of its domestic market. The forecast has significant implications not only for Indian economy but also for its position on the global stage. And moreover, this projected growth provides India with a potential edge over China, the world's second largest economy that has been experiencing a relative slowdown. And today we will explore what this growth forecast means for India, how it will improve the domestic market, and its impact on global standing and the comparative advantage it offers over China. Now first let us understand the IMF's revised forecast. Friends, the IMF's decision to hike India's GDP growth forecast to 7% for the financial year 2025, that is based on several positive economic indicators and structural reforms undertaken by the Indian government. And these include economic reforms. The Indian government has implemented significant economic reforms that aimed at improving the business environment, enhancing investment flows, and boosting industrial productivity. Next is digital transformation. You know that India's rapid digital transformation driven by initiatives such as Digital India has increased efficiencies across various sectors that contribute to economic growth. And now comes to fiscal policies. Sound fiscal policies and measures to control inflation have provided a stable macroeconomic environment conducive to growth. FDI, now that is foreign direct investment. Friends, increased FDI inflows driven by investor confidence in India's economic potential have also played a crucial role. This revised forecast is a positive signal reflecting the IMF's confidence in India's economic trajectory and its ability to navigate global economic challenges. The IMF's growth projection has several implications for the Indian domestic market, promising improvements across various sectors. The upward revision is likely to attract more domestic and foreign investments. Higher growth prospects enhance investor confidence, encouraging both private and public sector investments in infrastructure, manufacturing, technology, and also other key areas. This in turn leads to job creation, higher incomes, and improved standards of living. Higher GDP growth often translates into better employment opportunities and income growth, boosting consumer confidence. As disposable incomes rise, consumer spending on goods and services increases, stimulating demand in the domestic market. This cycle of increased spending and production drives further economic growth. and sectors such as manufacturing, services, and technology stand to benefit significantly from the projected growth. For instance, the manufacturing sector can expect increased order and production that driven by both domestic consumption and export demands. The services sector, including IT and finance, that will likely see an expansion as business scale up to meet growing demand, and a higher GDP growth rate enhances the overall health of the financial sector. Banks and financial institutions are likely to see an improvement in assets quality and reduce to non-performing assets as business perform better and loan defaults decrease. This creates more robust financial ecosystem capable of supporting further economic activities. And with increased economic activity, it is corresponding need for improved infrastructure. The Indian government's focus on developing infrastructure, including transportation, energy, and digital connectivity, will receive a further boost. Better infrastructure enhances productivity and efficiency that contributes to sustained long-term growth. India's enhanced GDP growth forecast positions it more favorably on the global economic stage. And with a projected growth rate of 7%, India reaffirms its position as one of the fastest growing major economies. And this growth trajectory enhances India's economic clout, enabling it to play a more significant role in global economic forums like G20, BRICS, and the World Trade Organizations, that is WTO. A higher growth rate, in fact, makes India an even more attractive destination for global investors. Multinational companies looking to diversify their investments and reduce dependency on China are increasingly viewing India as a viable alternative. This can lead to higher foreign direct investment, technology transfer, and job creation. India's enhanced economic performance strengthens its position as a global trading partner. Increased production capacities and improved infrastructure enable India to expand its export base, catering to markets across Asia, Europe, and Americas. A stronger export sector contributes to a favorable balance of trade and bolsters foreign exchange reserves. Economic strength often translates into increased soft power. India's ability to sustain high economic growth enhances its influence in regional and global geopolitics. And this economic leverage can be used to forge strategic alliances, participate in global decision-making process, and advocate for issues pertinent to developing nations. The IMF's upward revision of India's GDP growth forecast to 7% for financial year 2025 is a significant milestone reflecting country's economic resilience and potential. This growth projection promises to enhance the domestic market, improve global standing, and provide a comparative advantage over China. However, sustaining this growth requires continued efforts in reforms, infrastructure development, and inclusive policies. As India navigates this promising economic trajectory, it must also focus on leveraging its strengths, addressing challenges, and fostering an environment conducive to sustained growth and development. The IMF's forecast is not just a reflection of current achievements but a call to action for realizing the full potential of India's economic aspirations. That's all for today. Stay tuned with Uday India.